financial use cases that touch our day-to-day life, they need to connect with the TradFi stack, right? And I think this connection between DeFi and TradFi is clumsy, is difficult, is opaque, and is prone to risk. So I think the first aspect, I think the first evolution that will be required is for more stuff to come natively on chain. So we see a lot of securities tokenized, so-called, a lot of things natively coming on crypto stack. So I think the DeFi needs to expand a little bit because otherwise we are just like patching different technologies at the same time, and this creates risk.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward. With me today is Luca Prosperi, who is the CEO and co-founder of M0 Labs. Luca, great to have you on.
Thanks for having me, Tony.
Luca, as stated before the recording, I'm excited to learn about M0. You guys recently raised an incredible funding round, which was led by Bain Capital Crypto. But let's start with your background. Where are you from and what's your professional background?
I'm technically from Italy. Although I haven't lived in Italy for a very long time. I actually spent most of my adult career in London. I'm a mathematician by background. I spent like 15 years, more than 15 years in traditional finance as an advisor, investment banker, or investors in financial institutions before deciding that DeFi was too interesting for me to stay out of it during COVID, and then I decided to leave what I was doing before and join DeFi, the DeFi revolution. I mean, we can go as deep as you want there, but I spent the first couple of years being actively participating to some of the largest protocols in DeFi, most notably MakerDAO, advising some funds investing in the space and publishing my own research under a Substack called Dirt Roads that started as a game and became something more. And then we decided to join forces with my two co-founders, Oliver and Greg, and found M0 at the very end of 2022.
Now, you mentioned being in the TradFi historically and an advisor to companies and funds. What was your first encounter with crypto? Was it a DeFi protocol or was it Bitcoin? And where did it click for you?
Yeah, for me, it was not Bitcoin. For me, it was DeFi indeed. The reason is that I have been deeply involved in financial institutions for 15 years, right? And sometimes there is this misconception of, I don't know, a banker that who knows banking. Actually, bankers are service providers, or investors are service providers. They know the industry they operate in. I used to be a banker for bankers. So I used to be a financial institution specialist at Morgan Stanley, so one of the largest investment banks in the world. And I used to invest in banks and financial institutions. So I knew deeply how money is created, distributed, and how actually financial intermediation works. Most people ignore it. But I stayed out of the so-called fintech revolution because for me it was a very interesting front end, let's say, innovation, but the back end of financial institutions was always the same. Like, the way we create money, we move it, we store it, the way we recognize value, etc. So when I started looking at DeFi protocols, this was in the beginning of the DeFi summer, for me, it was like a eureka moment in the sense that I realized that for the first time, maybe even unconsciously, there were teams that were trying to reinvent the way actually we create money in the first place. So they were actually innovating the back end of financial institutions, which is very philosophical in nature. So that's why I got fascinated. So for me, the real click was MakerDAO. I don't even remember how I got in touch with the guys in the first place, but it was a very quick down the rabbit hole kind of process.
Wow. And does it surprise you that many of these firms like Morgan Stanley, BlackRock, and so forth are now participating with ETFs, Bitcoin ETFs? Many are testing tokenization. Some are custodying stablecoin reserves. I think BlackRock custodies Circle's USDC reserves. Do you feel this is inevitable? They all have to, capitulate to this technology?
Yes and no, in the sense that it doesn't surprise me that very sophisticated and diversified financial institutions like the large investment banks or asset managers like BlackRock are active, because the guys are very smart. They want to be at the forefront of innovation and they want to service an industry that emerges. The ETF, I think, is a separate story. I think there is market demand and they want to be on top of the flows. At the same time, not everyone is the same. So on the other side, we see a lot of resistance from traditional commercial banks about proper innovation in DeFi, because they really want to protect their business, right? And I think crypto is threatening the financial institutions' business and will keep threatening it. So in my opinion, the most innovative and smart institutions will adopt this revolution and thrive and transform themselves. The least innovative will not, and I think they will go back. They will just shrink with time. So it's interesting now to see this, the smart and most innovative ones get very active, and the others one get very resistant at the same time.
Yeah. Now, a quick question on DeFi, because I'm a big believer in DeFi. I believe it's the future. However, we've often seen with technology, version 1.0 is, nowhere close to being perfect, and there's usually a lot of flaws, and we've seen a lot of exploits around DeFi. Where do you think, or how do you think the industry goes from 1.0 to 2.0 to avoid these exploits and these things?
I think in a couple of ways. First of all, DeFi currently, in order to absorb most of the financial use cases that touch our day-to-day life, they need to connect with the TradFi stack, right? And I think this connection between DeFi and TradFi is clumsy, is difficult, is opaque, and is prone to risk. So I think the first aspect, I think the first evolution that will be required is for more stuff to come natively on chain. So we see a lot of securities tokenized, so-called, a lot of things natively coming on crypto stack. So I think the DeFi needs to expand a little bit, because otherwise we are just like patching different technologies at the same time, and this creates risk. And the second point is, I think the early builders in DeFi were degens, were innovators, were disruptors. This is great, but obviously some sort of institutionalization and professionalization of services is going to benefit everyone. And we have seen it also in tech, right? In Web 2. Google now is not a startup. Google is the largest company in the world or something like that. So they have very standardized processes and way to do stuff. So I think we are professionalizing ourselves as an industry as well.
Yeah, great points. So let's talk about M0. Tell us about M0, how it came about, and what's the mission?
Yeah, I think it's connected to what you were saying before. When us as founders, we fell in love with the MakerDAO construct and mission. MakerDAO was for those who are not too familiar, is still like a very big DeFi protocol, but it was an early protocol that was trying to innovate the way you create money. So instead of creating money, I don't want to get too nerdy on money creation, but in the word, banks create money out of thin air. It's not that they're giving you money that is someone else's. Now, in the case of MakerDAO, they had this system, decentralized and permissionless, to create fungible money by pledging certain digital assets. So we thought that was a very, very powerful construct. And within the DAO, we tried to expand it and to integrate it with the traditional financial world. And you mentioned BlackRock, but we spoke back in the days with many financial institutions, BlackRock, PIMCO, Societe Generale, and a few others. They wanted to connect to the protocol, and they were trying, but it was very difficult. So I think that we took those lessons and we decided to actually recreate a new protocol that would learn from those lessons, but without certain flaws in governance, in retail participation that we thought were detrimental for the protocol to scale. And at the same time, spend a lot of time thinking about the integration with the TradFi and protocol. And ultimately, what we want to do is very ambitious. I mean, I think we want to create a protocol that the elevator's pitch is a protocol that empowers a federation of minters. So any approved institution can come and bring and print a fully fungible stablecoin that is hyper transparent and is fully fungible across the network. The real ambition is bypass completely banking institutions and issuers from money generation. So instead of having a system with central banks and commercial banks, just like taking a lot of risk, but also participating in distributing money, etc., we would like to have a protocol like M0 at the center of everything, enforcing full transparency, innovation, so that money actually can be generated and used in fully fungible way without depending on the legacy stack. So it's very, very ambitious and long-term project.
So tell us about the protocol of the blockchain. Is obviously there's different protocols out there, proof of history, proof of stake, and so forth. What protocol does the M0 blockchain use?
So M0 is currently deployed on mainnet. So is on Ethereum mainnet. So that uses obviously the standard consensus approach of Ethereum. But this is the engine. We think the stablecoin, for a lack of a better term, that will be generated by interacting with M0 will exist on every chain. And how we are actually taking care of this portability is something that we're working on now.
Got it. And then there's the M token. Tell us about that and the tokenomics.
Yeah. So actually, we have 3 tokens. We like to do things complicated, apart from the jokes. And if you look at the M0 logo, it's M, a power symbol, and 0. There are reasons why the M0 is called M0, of course. The nerdier one is M power. Anything power 0 is always 1. So there is a lot of stability within the logo itself. So we actually have an M token, a power token, and a 0 token. Now the M token is what people in this space call a stablecoin. So the M token is a token that represents a claim on the underlying collateral and should be because of market forces softly pegged to the dollar. So for the user, the experience shouldn't be different from using a USDC and USDT. We just think is a better design in terms of transparency, in terms of resilience, in terms of yield portability within the stack. I think the M token is not yield bearing itself, but can bring underlying yield to the user venues. So the M is some sort of so-called stable coin, let's put it like that. And then the power token and the 0 token are our governance tokens. So the power token and the 0 tokens jointly, they govern the protocol. So they allow token holders to take decisions, who can come and connect, how to parameterize the protocol, and how to claim the economics of the protocol. Now, we are not a DAO in the appropriate sense, in the sense that we don't have a decentralized workforce. We don't have a treasury that is accrued by the protocol can be used by the DAO. We're just like a group of parties that take decisions through tokens, but there is no treasury, there is no underlying workforce. Whatever economic flow is generated by the protocol gets distributed out. And these 2 tokens have have a very like a rather sophisticated tokenomics, set of emissions and set of mechanisms, and we spend a long part of our white paper describing those.
Your core use case seems to be stablecoins, US dollar backed stablecoins. Are there other use cases? Could it be central bank digital currencies? Could a central bank use this for that? And are there other things like tokenization that are possible?
So the central bank digital currency is an interesting question. I don't think central banks could use M0 for CBDCs. I think M0 could use CBDCs for collateral. So it's the other way around. CBDCs most probably will be a wholesale instrument, meaning that central banks will use it interacting with wholesalers like commercial banks, etc. So currently the M0 protocol approves only US treasuries as collateral for the minting of stablecoin. Nothing forbids us to actually approve CBDCs as collateral for the issuance of stablecoins, because we always think there's going to be an additional layer for distribution required. So this is another point in the direction of bypassing the banking sector in several ways. When it comes to tokenization, yes, I think it's a very important point. I think our point is that we are using our technology stack to mint fully fungible stables from many issuers. We could evolve this technology stack to allow issuers to create asset tokens that actually have different collateral and different nature. So we could actually use the protocol to create some sort of on-chain securitization, so tokenization platform itself. It is actually one of the next chapters of our development roadmap. But now we're absolutely focused on the stablecoin use case, which we think is the largest use case in crypto and in the world. And I think has already seen obvious product market fit, market adoption, and very strong economics by the very few issuers that dominate those markets.
Yeah, absolutely. Now, maybe you can do a mock scenario. Let's say Morgan Stanley, right? They want to issue a stable coin and do it, let's say on M0. How will they go about doing that? And once they've issued that stable coin, what could they then use that stable coin to do? Lend it out, move it off onto another chain? Tell us about the different things an issuer can do.
Yeah, I think that it's supply and demand. I think the use of a stable coin is always the same. Like you use stable coins, you use money to store value, to transact, to settle, to do everything. Now, producing money is very profitable, because what you're actually doing when you produce money is you are, let's say, keeping someone's wealth and paying someone an interest. You deposit your money in a bank deposit, you get an interest rate. And then you use this money to invest it in the back end on certain assets. And typically, the money you pay to the depositors is way less than the yield you get from the assets, and you benefit from this spread. So printing money is a very profitable business. The issue is that this system works if there is a lot of demand for your money. So there has to be use for your money. And this is why we're seeing the domination of very few parties in the stablecoin. Because if you want to use a stablecoin, this stablecoin needs to be liquid. Otherwise, it's unusable. And currently, the only truly liquid stablecoin in the crypto space is Tether. It might not be a great stablecoin in the way it is designed, but it's super liquid and omnipresent. So people really use it, at least the people that are in crypto today. Now, whether this is good enough for the future of crypto, it's not for me to tell. I have opinions, of course, but it's not for me to tell. Now, so let's say that everyone wants to print a stablecoin. The reason why it's difficult for everyone to go their own way is because imagine if you have 10, 20, 50 stablecoins, you are fractionalizing the liquidity. And if you fractionalize the liquidity, there is not a real use for stablecoin. If there is not a real market for your stablecoins, who are you selling your stablecoin into? So the the fact that many institutions are thinking about issuing a stablecoin, we think is not a viable solution. It's just like a race to the bottom. So what we're trying to say here is that we are like, the call to action would be for institutions like Morgan Stanley, like large market makers, like some of the market makers in our cap table, the Wintermutes, the Galaxies, the GSRs of this world is, guys, you think it's very profitable to actually enter in the stablecoin business. So set yourselves up in a way to be compliant with the M0 requirements, and you all together mint the same stablecoin. So you kind of help each other by creating something that is bigger and is more liquid and can grow and benefit everyone. So stronger together kind of approach. In order to do that, we are now launching our first issuer of stable on the network that we are bootstrapping. We are publishing guidelines on how those issuers should be set up in order to be hyper safe for the backing of the stable.
Right.
We will open source these standards to the institutions who want to connect, and we will help those institutions to set themselves up to connect. So as soon as they have a good connector, which is some combination of legal structure and tech, they can actually park collateral, mint the stable, the same stable if they want, and use it in the network for everything. So that really want to empower this stronger together mantra, not only for the institutions, but also for other stablecoin projects, instead of going their own way. And not everyone has the benefit of, as the luxury of having raised the amount of money we did, just to come and participate with us. Stronger together.
Yeah, absolutely. And a follow-up question to that, how do you verify that the issuer has the reserves? And in context of, there is new stablecoin regulations coming in the EU, they're working on it in the United States. There's been questions about, are certain stablecoins backed appropriately? So how do you verify they have their reserves?
Yeah. Two elements for the answer. The second one is more controversial, but I'll risk it. The first one is that we have created a system today, a set of cross checks that can allow the ongoing daily verification that the reserves are there. What it means is that we are suggesting how the vehicles that hold the reserves should set up, what are the contractual obligations of the parties that come and interact, how they should look like. We are actually planning to publish templates of those contracts to make sure that the contractual setup is as strong as possible, so that we are piggybacking on law. The second part is we are empowering a network of so-called validators that have the ability to continuously check those reserves and publish signatures about what's in those reserves. And those validators are independent, so that there is an independent check ongoing. And the penalty for not having this independent check is to be depermissioned by the protocol. The third aspect is governance, right? We want governance to be always ongoing on top of what's going on. So I think we have a system of several cross checks, but also we know that part will evolve, right? At some point, the reserves will exist directly on chain and we can just purchase them and put them in a smart contract. But this is not what happens today. Now, the second part of your question is that I think that the current M0 construct is not compatible with European regulation or US regulation, because the US regulation and European regulation are not good enough. They are exposing the holders to a lot of unnecessary risk. I make you an example. Like, if the regulator would have decided not to bail Silicon Valley Bank, the Circle USDC holders would have incurred like a massive loss, and Circle would have been doomed. And I think that when you park money in a bank account, you do it because you want to use your money, not because you want to provide an unsecured loan to a bank. I think that there are other regulators that are more forward-looking in how to actually store the reserves, like Singapore, like Dubai, like I think New York as well. But telling someone that you need to back a stable coin with deposits that are sitting in a bank is not synonymous of risk-free. It means that you are taking the risk of the bank. And the risk of the bank is unsecured. If the bank goes down and you have more than $100,000 in an account, which any stablecoin issuer has, you are incurring losses. And it's not too safe. So it's as safe as the... So I think that we are spending a lot of time, as you can imagine, in trying to make sure that the collateral backing, collateral storage, and reserves transparency is as pristine as possible, because this is very, very important for us.
Yeah, absolutely. I did have a question about, there seems to be more demand, and this is probably because the US dollar is the world reserve currency, but for US backed stablecoins versus euro backed stablecoins or any other fiat currency, is that what you're seeing? And is that why you're primarily focused on US backed, that people around the world, they want the US dollar because it has that store of value? It is the world reserve currency.
Yes, absolutely. I would say US backed rather than US backed, but yes, absolutely. We are convinced that today, the reserve currency of the world is the dollar, and crypto is by definition global. So they will adopt the reserve currency of the world. At the same time, we think this can evolve. The reason why we called the stablecoin M and not M dollar or MUSD or something like that is because we think that this pegging might actually change. It might become a basket of currencies. It might become some sort of combination of digital assets. We don't know. So we think that the pegging, the reference currency in the world might change with time, but we think we live in a dollarized world, and we will live in a dollarized world for a very long time.
Yeah, you brought up a great point about it might be a basket of currencies in the future, as maybe, these different countries launch their CBDCs, maybe because it's in a digital format, it can be pooled together in a basket.
Absolutely.
And then you have like countries like the BRICS countries are coming together and using alternatives to the US dollar. And that's a whole geopolitical thing, but we're seeing signs of possible change.
Yes, absolutely. Being a reserve currency, going back to the point that printing currency is a very profitable business, because it means that you can finance yourself at very attractive rates. Printing currency is a geopolitical game, and the US dollar wants to protect its space. I'm sure that other geopolitical pillars want to do the same. Like, funnily enough, and this is something that is shared by others in crypto, I think that stable coins that are backed by treasuries are doing a big favor to the US dollar. They are really empowering the US dollar as a reference currency on this new monetary stack. Offshore dollars already exist. There is this weird concept of euro dollar, which is an offshore dollar that is printed outside of the banking system, a bit like asset-backed stablecoins today, a bit like Tether. This stuff already exists. There are 15 to 20 trillion dollars of euro dollars existing. It's just like it's so weird and so opaque and non-standardized that people do not really know what it is. So we can actually standardize it. But I think dollar treasury-backed stablecoins which are dollar-pegged, can do a huge favor to the US in maintaining their status as a reference currency of the world.
Yes, absolutely. And it was funny because I think just last week there was a report or an opinion piece in the Wall Street Journal where former speaker Paul Ryan mentioned exactly what you're saying. For the US to maintain that world reserve currency status, you need to get clarity. We need to have that US Treasury backed stable coin, and that could help maintain that status. So these,
yes,
yeah, this is the dialogue is happening already.
Yeah, it is at the same time. I think this is, the US, let's say the regulated US banking system is way smaller than the universe of holders of US treasuries. So most of US treasuries are sitting outside of the US, right? The natural buyers are outside of the US. So by forcing US dollar backed stablecoins to exist only originate only from the US, we are massively limiting the space. I think by allowing anyone in the world to pledge their collateral and mint USD-backed stablecoins, we are really expanding this space, because the holders of treasuries are way more than the regulated banks we have in the US, right? Most of treasuries, I don't have the stats in my head, but I guess that most of treasuries, US treasury, are probably sitting in China, the Middle East, or in other countries which are not the US, and they want to have some sort of US reserves.
Mm. What do you think the stablecoin market looks like in this is a hard question. It looks like in 5 years. Let's say we have different iterations of regulations. We have more DeFi protocols such as M0. And you have some of these big commercial payment companies like Ripple said they're going to launch a stablecoin. You have PayPal has a stablecoin. We talked about Circle and Tether. What do you think the stablecoin market looks like in 5 years?
That's a very difficult question, obviously, right? Because it really depends on how much, what will be the next big use case of crypto. I think the first use case of crypto was trading. So they needed a trading pair. That's why Tether was very powerful. Then DeFi came in, and Circle had a pretty strong peg, and so the Circle grew. Now we're starting to see the use of stable coins for remittances, or in fintech. So it's really difficult to tell. But in my opinion, in 10 years, no one will care what is the flavor and the brand of the stablecoin. We will all look at our application that has a dollar amount, and we don't know how actually this dollar amount is created. And stable coins will be very powerful backend stacks. So in 10 years, people will not care. And I think there will be a few big ones, but this market is going to be $2 trillion. So there will probably be like 10, 20 big players. In 5 years, I think there is the risk of having more, because everyone will just rush and try to run their own. And I think we will still have like 60, 70% of the market dominated by very few players. And the rest, just like a long tail. So there's going to be a lot of activity, I think, the next 4 or 5 years, because it's a very interesting space.
Yeah. I'm already seeing rumblings and talks of random Wall Street firms and different folks looking to launch stable coins. So we'll see how things pan out. Now, recently, you guys had a $35 million funding round led by Bain Capital Crypto. Tell us about that.
Yeah, so we have been lucky to have the belief of amazing investors since the very beginning of our story. I think we raised a $22.5 million seed at the very beginning of 2023. It was led by Pantera. It was already a very, very large seed, in all standards. But then, we have been discussing about very high quality investors since forever, right? So Bain offered their interest to actually come into the cap table at the beginning of the year. We really like them because I think that they can provide this connectivity with the fintech space that we were looking for, and then we started conversations, and I think that conversations then materialized into a Series A that was heavily oversubscribed, but it was, I think, a very successful Series A. Raising $35 million, and I think that another great success we had was not only the participation of Bain Capital Crypto and our current investors, but also the participation of some of the best strategic players in crypto, right? So Galaxy Digital is an investor of ours, Wintermute, GSR, Caladan, SCB 10X, which is the venture fund of one of the largest Asian financial institutions, because our ambition is really to build an infrastructure for crypto savvy and crypto friendly institutions to expand their footprint in the industry. So I think we have an incredible cap table. I couldn't be more like happier or more proud of the cap table we put together. Now we need to demonstrate the guys that invested the money with the right team.
And what's on the roadmap for the remainder of 2024 for you guys?
So we launched technically a large part of the stack on chain in conjunction with the raise. So our governance protocol is on mainnet. Our core protocol is on mainnet itself, and we will start issuing the first large chunks of stablecoins through the protocol in the next few weeks. And then the remainder of the year, of the next 2 years, is going to be integrations. Just like convincing venues that M is a better stablecoin to integrate with. So new chains, new DeFi protocols, new lending markets, new exchanges, new large users. And on the other side, on the supply side, as we say, convince issuers or wannabe issuers and projects of stablecoins that they should join forces and issue on the M0 network. So I think most of our job in the next 12 months, 24 months is going to be in just educating the market, learning from the market feedback, and just convincing projects and issuers and participants and distribution venues to just integrate with us. So we will spend a lot of time outside of the company, not necessarily outside. We spend the first 18 months of our journey, as always happens, very focused in building. Now I think we need to integrate what we built with the rest of the world.
Yeah, for sure. I did want to get your thoughts on the crypto market at large. Obviously, there's been a lot of success with the Bitcoin ETF launch. Wall Street is here. There's been incredible inflows. And just recently, the SEC started to approve the Ethereum spot ETFs. What are your thoughts on the ETFs and the success they've had so far?
I think from a business perspective, let's start from a innovator's perspective. I think from an innovator's perspective, it is an incredible success story. I think never, like, unprecedented, that an asset like Bitcoin that started in the cypherpunk cycles and was antagonized by pretty much everyone, managed without any centralized coordination to go through all the required processes and be the backing of one of the largest ETFs in the world is astonishing. And I think this is really an incredible positive story. Whatever you believe in crypto or not, the fact that a disordered movement can go through the ranks of Wall Street and take central place, it's just like for a builder and a disruptor is spectacular. From a business perspective, it's also transformational. I mean, like the amount of liquidity that will come in the compartment directly or indirectly through the ETFs is going to be transformational for this space. There is going to be more money for builders to build, more money flowing through the pipes of crypto and DeFi, requiring also higher standards for builders. And then naturally, it will provide more familiarity for users about what those technology stacks can do. And I think on this, the Ethereum ETF is going to be even more transformational than the Bitcoin ETF. I think the Bitcoin use case of being the digital version of gold now it's completely accepted, and I think this stuff will keep growing, but it's self-contained. I think the Ethereum ETF, with Ethereum being considered almost a common good, that is like, it's like a socialized platform to build interesting stuff on top, like the global computer, is even more transformational because the liquidity is going to go straight into that. So I think it is impossible to overstate the importance of this for the sector. So it's pretty exciting.
Yeah. So on that note with Ethereum, do you view it as, you mentioned global computer, do you view it as a software almost, where anybody can plug in open source software?
I think Ethereum blurs the distinction between what is software, what is hardware. I mean, it's a software that allows the use of shared hardware, is de facto hardware, but it's somewhere in between. But I think, in my opinion, is software hardware infrastructure that allows anyone to actually build something great without the cost of bootstrapping, like an infrastructure that provides security. So anyone can do stuff by sharing this consensus security that Ethereum is, and this consensus memory that Ethereum is. So I think it's something in between.
Yeah. What are your thoughts on crypto regulations? Obviously, around the globe, there's different countries working on these things. Here in the United States, there's been a lot of movement lately with Congress and Democrats joining Republicans, where it's going to help bring clarity between what's a security, what's not, what's the SEC's role, what's the CFTC's role, because that's hindering a lot of innovators here in the United States, at least. Do you think we see comprehensive regulations by next year?
This is too difficult for me. I don't think we will. I'm pessimistic in the short term. I'm optimistic in the long term, for the same reason, which is political pragmatism. I think this issue is extremely charged up politically, and politicians in good or bad faith will use it as an issue to rally their own electorate on.
Yeah.
It's also a very charged up point, because there are powerful lobbies that are lobbying one side or the other. But I think in the long term, I think that the technological superiority of crypto, it's so obvious that it will keep pushing use cases, and use cases will keep pushing interests of the public, and politicians tend to listen to the public because the public votes them. So I think that in the next year, I'm not too optimistic. Although I hope for a constructive and open and good faith debate about required regulation. But I'm not too optimistic that we're going to find absolute clarity. But I think the direction is relatively clear, and I'm very optimistic over the next 5 to 10.
Yeah, I'm in agreement with you there. Luca, I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
I have pretty schizophrenic interests, so it will be some sort of like Ready Player One type of like randomic universe with everything in it.
Nice. And rapid fire questions. Favorite food?
I'm Italian and I'm a Japanese obsessed person. So I think I would say both, like Italian cuisine and Japanese one. Minimal, great ingredients, quality of the ingredients, and attention of the craft.
Favorite musician or band?
Going back to the Ready Player One thing, I'm an opera fan. I love Italian opera, but I also love hip hop, mainly East Coast old school hip hop.
Favorite movie?
Tampopo is a Japanese movie about food from the 70s. Pretty niche, but pretty good.
I'll have to check that one. I haven't heard about it, but I'll check it out. Favorite book?
I think Ulysses by James Joyce.
And when you're not working at M0, what are you doing for fun?
I used to be a semi-professional endurance athlete. So I'm not competitive anymore, but I still do a lot of sports. So I'm a mountaineer. I do a lot of like very, very long races in the mountains without sleeping. And when my wife allows me. So family is the most important thing for me. Together we work.
For sure. Luca, really great chatting with you. I'm excited for the future updates around M0, but thank you so much for joining me.
Thanks, Tony. A pleasure.